back to World Crisis Radio. We're trying to keep up with this rapidly unfolding disintegration of the world economic system. It looks like the Eurocrats of Brussels are extorting more austerity cuts, more genocidal budget cuts are being extorted from Berlusconi even as we speak. This afternoon, the New York Dow was down 250 points, and at that point, it looks like Geithner got on the phone with Trichet at the European Central Bank, and Trichet then came out to announce that the European Central Bank would buy Italian bonds and Spanish bonds. Interestingly enough, Trichet, a lunatic if there ever was one, a real doctrinaire pedant of crazy economics, Trichet had come forward to say, yes, he had stopped buying all European government bonds 4 months ago, but he said, now I'll buy Greek bonds and Portuguese bonds and Irish bonds, or at least Portuguese and Irish, but I won't buy those Italian bonds and those Spanish bonds until I get more austerity out of them. What a lunatic. He must bear part of the responsibility for this crash with his doctrinaire behavior, because those are exactly the ones you need to buy, Trichet, because those are the ones that are under attack by credit default swaps. So the fact that he wasn't buying them was another way that it was possible to begin this snowballing crisis of the Spanish and the Italian bonds that we've been talking about. Now, the big thing in this crisis is Italy, and as we've been following, Italy came under attack very heavily, essentially on July 11th. July 11th was the turning point when Italy came under heavy attack. How? By hedge funds and zombie banks using credit default swaps. Those credit default swaps have got to be banned. There is no way to placate a cabal of hedge fund hyenas and zombie bankers who are coming after you for political and economic reasons, for looting as well as for political hegemony, which means looting further down the road. If they're using credit default swaps on you, the only thing to do is to ban and to tax those credit default swaps. Ban some, tax the rest. Ban the credit default swaps, tax other derivatives that they might use. Italy had been fighting back a little bit. We had Michele Ruggero down there in Trani investigating the ratings agencies, which are, of course, ongoing criminal conspiracies under the RICO statute. Berlusconi and Tremonti had come up with this austerity plan, again, $57 billion, and they were saying, no, that's not enough. He gave a speech or press conference yesterday, and the hedge fund hyenas decided that it was not enough genocidal austerity in that picture. Again, the Italian stock market getting battered. Italy will have to sell $90 billion of bonds in September, and they all say, no, you won't be able to float those at a decent price. Notice the Italian debt structure is more advantageous than some of these other countries. The Italians have a long-term debt. Normally that would insulate them from the short-term stuff. But now we have this attack. So it is certainly orchestrated in the sense that we've described. Now, people are saying, is this the new 2008? Well, let's look around. Who might be the new Lehman Brothers? Well, one obvious one. We just had a guy on CNBC. Let's see if we can see who this guy was. I think his organization was called Hedge Eye. Hedge Eye says that the John Paulson and Company, owned by John Paulson, this is not Hank Paulson, but John Paulson, is in the process of blowing up. That one of his funds was down 22% in the last reporting period, and that bodes ill for the fate of this complex. There were rumors yesterday, Thursday, that a hedge fund was in trouble somewhere, and that was exacerbating the U.S. side of this disintegration panic. Who are the other basket cases? Well, there's always Bank of America. Bank of America lagging today. Whatever the rest of the market does, the Bank of America always does worse. Citibank, not far behind, down between 5 and 6% on Friday before Trichet. After that, they gained back. Commerzbank in Germany, not looking too doggone good. Their stock is down to about $3. They're below 250 euros. And you take a look at the chart of Commerzbank, and you'll immediately see. Put it on a linear scale so you can see the full fury of what's going on. So Bank of America, Citibank, Commerzbank, Paulson and Company, all of these contributing to the general atmosphere of fear. There's also a lot of fear of French banks in the U.S. Money market accounts. This is another thing. The commercial paper market may be seizing up. When the commercial paper market freezes, this is very bad because, companies, there are all kinds of discountable pieces of interest-bearing paper, basically, that they generate in the course of productive operations, right? Typically a bill of lading, right? You load a freighter with grain or with manufactured goods, you send it off. What do you do with that bill of lading? Well, you can take that and discount it, get 99 or 95% on the dollar, pay your own payroll that week, and the factor or the bank that's getting the money in the end will collect. That seems now to be getting rough. There's also a question of the repo market, repurchase market, which is much used by hedge funds and zombie banks. This is for insiders, and the roiling of that had a lot to do with the possible default of the U.S. Treasury bill and bond. You remember the big event, really, one of the big events in the panic of 2008, that September, was in mid-September when the primary fund broke the buck, when it went down below $1 per share. That was a sign that things were really getting bad. Now, background causes for this certainly are that Europe has failed to re-regulate. Right? The Europeans with Schäuble, back in May of last year, May 2010, Schäuble was talking about the need to ban naked credit default swaps Europe-wide. It was not done. You must ban naked credit default swaps, I would say all credit default swaps, to protect yourself from speculation. It's just elementary. How can you not do this? You're being called upon to cough up hundreds of billions of dollars more. They want to take the bailout from 250 billion euros to 440 billion euros. Ban credit default swaps, naked for sure, and I would say all of them. The other thing they needed was the famous Tobin tax, the Wall Street, or in this case, the financial transfer tax, the Robin Hood tax, call it what you want, the equivalent of the Wall Street sales tax. And they didn't do that either. Those two things. Credit default swaps not banned, no Tobin tax imposed. That's the key to the impotence of Europe. If you want to look at what decisions they make that are bad, well, that's clearly those. So the European banks are trying to borrow dollars, and people don't want to lend to them. And those same European banks are dumping their U.S. assets to raise cash. That's what's bringing down the U.S. stock market, although watch out for Paulson and these other basket cases in the background. Be back in a minute.